Amazon went public back in 1997. If you have been investing just $100 in Amazon back then, you would have made almost $1.3 million. Let's say you would have been a bit more generous and invested $100,000. Your net worth would be $129 million. Unfortunately, you missed your opportunity, but you shouldn't be sad because in the middle of so many worthless online companies that were launched in the 1990s, it was extremely difficult to predict that Amazon will be one of that will cost $1 trillion valuation 20 years later. However, we are now in the middle of another great opportunity. Even if you don't have the $100,000, you can make a difference by investing as little as $1,000. So let's start with the first one. Pick up 2 or 3 stocks. I know that many of you would point fingers at me and say that you need much more than that to earn a reasonable amount of the stocks market. And I totally agree with you, but I want you to look at it from different angle. In the last 12 years, the stock market has only been growing. If you take a look at any well-established company, you will realize that their stocks has been going upward, but due to the unforeseen pandemic, everything is down. But we all perfectly know that sooner or later the pandemic is going to be over and life will get back to the normal, at least to the certain extent. Companies like Apple and Coca-Cola and the few others are so great that the risk they would go broke is shallow because they see products that people either need or strongly desire, and they are perfect at doing that. But right now, their stocks are sold at the huge discounts, like 30 to 40%. And if we are going to recession, then you can expect a future further drop. And so it's a perfect opportunity to double your $1,000 or even triple in a very short period of time. Take an example of Adobe. It was down by 20%, but since they created products we all need, the stock's price has almost completely recovered. Whoever invested at that already made a huge return in just a few months. Don't choose many companies, 2 or 3 would be a perfect choice. You can, of course, bet on some of the riskier companies, such as the airlines that have suffered more, or auto markets. But remember, if you are going to take bigger risk, you should be willing to lose that money in the case of things go wrong. Second, my next choice is gold. Before you throw at me your angry comments, you told us not to invest in the gold in the previous video. Why are you telling us to invest in the gold now? Let me make my case. Gold is, of course, not a great investment, and it's quite useless in many cases. And I'm not denying the fact that it has some purpose, but does iron and any metals. But it does not produce anything. It just sits in the corner and shines. It might make you feel good when you look at it, but that's about it. Um, Gold's most important role throughout history has been preserving wealth. The future is unpredictable. Financial crisis, wars, instabilities happens all around the world, but the face is gold never fade. Anyway, yes, of course, sometimes it's high, other times it's low, but it's always there in some form. In fact, when there is the gold standard, inflation was literally at 0%. But why gold is the good investment now? During gold times, when the economy is going fine, the companies are growing, the GDP is hitting record, so gold prices do not rise that much. They rise together with the rate of the inflations. Investing in gold would be a horrible choice when you have an opportunity to invest in the stock markets and double or triple your rate of return. However, when there are chaos and instability, people are afraid their primary concern isn't to make more money, even though it's the golden opportunity, but not to lose the money they already have. And they would do everything to preserve it. So when they see that the stock market is doing terrible, often people move their wealth to the gold because they know that gold will always keep its value. That's why during any instability, gold prices soar. In the last 6 months since this pandemic was started, gold prices rose from the 1,450 USD to 1,700. And if the crisis keeps going, gold prices will keep rising. But there is the problem: sooner or later the crisis will be gone, and people's confidence in the stocks market will be back. So more and more people will invest in the stock markets, and less in the gold, which means the gold price will fall. That's why you have to exit the market at the right time before gold prices will collapse. When is that going to happen? Well, that's your job to figure out. Start low-cost businesses. Back in 1990s, when the internet was getting popular, some of the greatest companies emerged: Google, eBay, PayPal, and dozens more. People literally made billions of dollars. Mark Cuban made the online radio and sold it to Yahoo for the $4 billion. And I believe right now we have the similar opportunity. Maybe not as big as the dot-com bubble, but essential nonsense nonetheless. Because suddenly we all have to stay at home, but businesses can't afford that. They have to find a way to keep making money. So if you are a developer or passionate about that right now, with little as the few $100 or even the thousand, you can build up something simple but helpful. Maybe an app that will help us to stay connected while we are stuck at home. Since the gyms are closed and a lot of the people would avoid going to the gym until the vaccine will be available. The app that will help you to move effectively work out at home would be a good idea. For God's sakes, if you actively work out, you can start recording videos on the how work at home. Since I stopped going to the gym, so all I do is Google and watch YouTube videos at the best home workouts for the chest, biceps, shoulders, legs. I don't want to lose all my giant due to this virus, and I'm sure there's plenty of the other people like me as well. Or even if you don't have any valuable skills, spend a few $100s to learn one as soon as possible, such as the online and social media marketing. Spend another few $100s to test your knowledge and comfort any businesses that is stuck in this crisis. They are desperate to find a way to keep the business running. Colleges and universities were one of the first places that were closed down, and they will try to online as such as possible. Sounds like the perfect opportunity to teach online. This is the literally the endless number, so the opportunities. Do not jump into all of them. You just have to $1,000. Pick up one and go all in. Of course, there is the chance that it might not work out, but if you make it happen, returns are incredibly high. Next, cover your high interest debts. Credit cards are great. I believe everyone should use them responsibly, and I want to underline responsibility, because if you wish to be qualified for the mortgage, be trusted by financial institutions to get a loan for your businesses, you need a good credit score, and to build it, you need to use the credit card. However, quite often people blow it up, and interest rates on credit cards are freaking insane, like 15-20%. You must be financially super irresponsible to pay that much interest. 20% is $1,000 debts in $200. Of course, this doesn't apply to all your debts. If you have a student loan or the mortgage, it will be wise to pay just enough to keep it going. while investing in the rest of the money. But whether returns you make on your investments, your credit card investments will outweigh them, especially in the long run. Those interests will accumulate much faster due to the effect of compounding interest. That's why getting rid of the such debts should be your first priority. And lastly, give your old self the gift. This is not the best options, and I wouldn't choose these options personally. Nonetheless, it might be a good option for some. We have already talked a couple of the times and investing in the index funds, but of course that's one grant does seems to make the difference. However, numbers tells us a different story. The returns on the stocks market are different every year. Some years is the high as 10 to 12 to 20%. Other times it's as low as the 5%. Barely beating inflation. However, over a long period of an average rate returns has been 10%, and with compounding interest that $1,000 turns into $53,000 over 40 years. Of course, 54 is going to worth much less 40 years from now, but still would be a considerable amount. If you are afraid of the taking risks and you literally don't know what to do with that $1,000, I think it would be better if you keep it an index funds and use it when you retire. Who knows how your life will end up when you are 60 or 70 years old. Then $53,000 might be crucial for you. Again, it's not a perfect option, but worth considering for some. I hope you guys have enjoyed this video. Make sure you give this video a thumbs up and leave the comment because that will really help the channel. And of course, hit the subscribe button if you are new around here. Thanks for watching, and until next time.